Good evening from Copenhagen, and welcome to Bitcoin Treasuries World episode 42, Metaplanet Roundtable. We are back to Metaplanet Roundtable after I have been off on holiday, slowly getting back, trying to get on top of things on X. So many things going on, so much has happened, and we've spoken about a bunch of topics here in the green room before going live. Today, Christina she's at the beach. She's not here, but Ragnar, he's also on the beach, but he brought his styling. So he is here. So welcome to Ragnar, who's a debut here. And welcome to all you, Climb, Blake, Brian, but let's go to you first. Ragnar, just hi and welcome, and good to see you here.
Hey, hi. Good to see you. Glad to be here.
Well, see you.
Good to be on the show right now.
Exactly.
Brian, yeah, good to see you too, Brian. Welcome, man. That was for you, Brian. Blake,
good to see everybody. Good to see you.
Yeah. Blake, Climb, good to see you guys. So we've spoken about a bunch of topics, and by the way, it's July 29. Bitcoin is around $117,000, and Metaplanet is trading around $8 in US. We spoke about a couple of different topics that we may want to cover here in Metaplanet Roundtable today. One of them is the prioritization from investor point of view of BTC yield versus stack size. Is a little bit of that speed versus size, Metaplanet versus MSTR. The current market sentiment across all backs have gone quite negative. Prices are down, which means you can buy them cheaper. Climb has a graph for us, obviously, looking forward to that. Q3 so far, Bitcoin quarter to date BTC yield in Q3 is 22.5%, and MNAV is only 2.79 now. So that is great. And Brian spoke about the interview with Simon on Richard Byworth, which I think is really interesting about the US office. And then of course PFIC and the thought that was around tax and the potential problem. So guys, over to you. Choose a topic and let's run with it, and then we'll cover them all. Who wants to go first? We can always start with the graph from Climb here. Wait, if I go like this. So Climb, yeah, again, good to see you again after I have been gone for a little while here on Metaplanet Roundtable. Tell us what you see on this graph and why you wanted to share it with the show today.
Yeah, so a lot of people take this as a projection of where we'll be at the end of this year, and that's not the main intention of this graph. Like that is showing the current trajectory, but there's sort of two main takeaways from this. One, seeing that the MNAV volatility is vitality, and if people think about the phrase volatility is vitality, Bitcoin's already volatile. So the only way really to gain volatility above Bitcoin is with MNAV volatility, essentially. Short term, there's yield compression yield and then MNAV compression that kind of counteracts. So that's not like completely true on all time frames, but it's essentially true. And what you see here too is not only that the orange is the stock price, the y-axis is on a log base 2 scale. And you don't just see that we trade between sort of a 3 and 7 MNAV, and in the future that'll compress as their Bitcoin stack gets a lot larger. That's my belief. And if it doesn't, then that's bonus points. But my belief is that it will. But a large takeaway too is looking at what happened in May, in April, where we were hugging the bottom, the white line there. The white, green, and blue lines, the 3, 5, 7 MNAV calculated prices, what the price would be if it was trading at 3, 5, or 7 MNAV, those kept climbing even when we were trading below the bottom line. And so that's something that I think a lot of people don't really understand. And that's essentially the situation that we're back in now. And if things stretch out over time and price predictions get shoved out, or the 555 plan goes a little slower, I don't necessarily think it will, but let's just say it does. This is an option that doesn't expire. and I don't care too much if I have to wait 6 months or 9 months for the conclusion of this plan and to see what I think will be much higher prices.
Right, and Climb, you are not at all, like, personally, I'm not, but I want to ask you, you're not at all worried that MNAV falls to a point where the yield of selling stock into the market with premium is not gonna generate enough Bitcoin on the balance sheet.
Yeah, that's correct. Yes, I mean, even if we sold the remaining of the 555 shares, I can't remember, but let's say there's 450 something million shares left. If we sold them at an average price of $10, then that's another almost 40,000 Bitcoin, 35,000 Bitcoin, something like that. So that puts us over 50, I think, there. If we stay at 3 MNAV for the remainder of the 555 plan with weekly dilution and just stay at 3 MNAV the whole time, they end up with 80,000 Bitcoin total and a stock price of $24, $25. Kind of regardless almost of how long it takes for the plan to go. That's essentially how the math works out.
I like it. I like the way you think, as the meme goes. Ragnar, do you have some comments here on what Climb is saying? What's your thoughts?
I mean, in general, I'm really impressed. I don't have the exact number, but according to the 450 left, we are now like 19% done, which really impresses me. I mean, we've been like going down and sideways now for a while, and they still have been able to complete 19%, which is really impressive. So I'm not worried at all. I think these are great great entry possibilities at these prices. And I think they will just continue with their plan. I have full confidence in them.
Yeah, same here. Brian, your takeaway?
Yeah, I think one thing that, if you extend this chart to the left and down and capture, the first, say, year or so of Metaplanet's price action, we've seen these about 5 to 6 month cycles where you get an MNAV peak and then a trough. And we're about, I want to say 4 or 5 months into that 5 to 6 month cycle right now. And I think a lot of people just joined the trade during the last trough. And so they haven't really seen this happen before. So, it's the first trip for many people, but, we've been here before. And, to me, it just looks like, the normal, quasi range bound price action playing out. So I think that, August typically is a weaker month, but September, there's a lot of interesting things happening. That's when the shareholder meeting is coming. There could just be some excitement in the space in general, because that's when strategy could potentially be added to S&P 500. And, in my mind, that's the time I'm looking forward to potentially the cycle flipping back the other direction and heading back up towards the top of that channel.
Interesting. Very interesting that you're thinking about and have looked at how things looked on this graph before 28th of February. And I was not aware of that. I joined this trade the 2nd of May, and that's interesting that the MNAV has that 5 month cycle historically until now. So I'm looking forward to seeing it continue, hopefully. Yeah, Blake, what do you think when you see this, and what's your belief in the future, and are we going to go back up with the MNAV, or how do you see this?
Yeah, I think it obviously shows, but it's also interesting to think about how potentially tradable this MNAV is with treasury companies, where the CEO says they're going to keep it within a certain range. And going back to Climb's point of the volatility, I can't speak right now, but
volatility is vitality.
Volatility.
Yeah, no, I know the feeling. Trust me.
It is an interesting thing to think about trading around. I haven't wrapped my head around that, but that's what I think about when I see these patterns. How you can potentially be on 2 rocket ships at the same time, MicroStrategy, Metaplanet, and potentially trade around it, but I haven't wrapped my head around that. And I know Ragnar has discussed that on. It's probably thought about it as well.
I lost you a little bit there, Blake. I don't know if the rest of you could hear Blake. Nope.
It's thought about it a lot more than I have. I've seen his post on.
All right. Gotcha. So this takes us a little bit into, so obviously the MNAV has to, but I do want to hear you first, Climb. So we've looked at this graph. Is there anything else you want to add to this, or you think is a obvious next point in this train of thought?
I take history with as high of an importance as I can, right? So history doesn't mean that that's what's going to happen in the future. But if a stock has been stuck at 1 MNAV for a few months, I'm not going to expect it to go to 5 MNAV. If a stock has been trading between 3 and 7, let's call it, for quite a while, I think that's a pretty reasonable range. And part of the reason is that it's somewhat a self-fulfilling prophecy, because people see this, and I mean, people like Adam Back, he's a big investor in a lot of these companies, but he also trades a little bit between them. I think probably while holding a strong position. I don't know if he ever completely gets out. I'm not sure, but he tends to be a buyer around 4 or 3 MNAV for Metaplanet, and maybe he's a seller at 7 to 10 or whatever. The range might be a little different as time goes on, but so there's extra volume that comes from people buying value and selling hype there. And then, other people trade the trend, and that adds to volume. Everything adds to volume, and there's different traders that look at this differently. And then some people just buy and hold, and then, that takes away some of the supply that's out there. And then shorts, obviously they go in heavy, and they have 80 million something shares short right now that are public knowledge, a lot more than that probably that are not. And at least 1 or 2 of the big names are pretty underwater from what I can tell.
Ragnar, and any thoughts on that? Buying cheap, selling high, moving around allocations, like Climb is describing here that Adam Back does.
I mean, for me, MNAV, I think, is the engine of it all. So, but the true engine behind the MNAV is the BTC yield. That's really what's driving the ship. And right now, in Q3, we had a BTC yield of 22.5% for Metaplanet, which is okay-ish, but it's not as high as it has been. For example, SWC had 130%, H100 also 130, but they are much smaller. So I'm not worried about the 22%. But I think that's right. I think there are a lot of people that are piling in below an MNAV of 3, let's say, and then selling the hype. That makes total sense. And personally, I would be more worried if we were stuck at an 1.2 MNAV. So I think, what are we right now? We are at an 2.8 basic MNAV and then 3.5 fully diluted MNAV. So really, really healthy. The playbook works. And I think that's what's most important.
So this is interesting because there are different numbers floating around. And Metaplanet, they on their own analytics on the website, on the analytics page, show 2.79 for fully diluted. So it's, but I mean, let's just agree that it's in that ballpark somewhere. And I'm curious to hear your guys' thoughts on the danger of the MNAV actually dropping below 2 or below 1.5 and the whole engine stopping. Is that something to fear for Metaplanet? And Ragnar, since you kind of got into it, I want to just hear your comment, and then we can go on to Brian and Blake, and you guys can add also comments to the previous point if you like. Ragnar, are you afraid that
Absolutely. So So first of all, the MNAV on their dashboard, that's the basic MNAV because it's based on the enterprise value, and the enterprise value is based on the market cap, and the market cap is based on the shares outstanding. So it's the basic
Gotcha.
MNAV.
Okay.
And if you then take the fully diluted MNAV, then it's always a little bit higher, of course.
Okay.
So totally not worried about that. That's a totally fine MNAV right now. But of course, I think the biggest risk for this whole industry is the doom loop at a very low MNAV. I mean, a lot of companies are stuck there, Semler, for example. So I think that's a real risk, and I think it could theoretically happen. I mean, if enough short sellers sell it short for a long enough time, and we just can't get out of this hole, then I think it could theoretically happen. But historically, it hasn't happened. Historically, we've been in this range of between 3 and 8, let's say, which is very, very encouraging and positive. And also the team, Simon, they are very seriously, they try to keep it there. Of course, they have no perfect way to do that. But low enough. Do I have?
There was, but you're back.
Okay, sorry. Yeah, I have a really bad cell phone connection. I didn't get out my Starlink. Maybe I should have.
Oh yeah, you promised me
What did you hear?
Starlink. Oh, I mean, if you could just take the last 10 seconds or 15 seconds.
Yeah, sure. So I think the most important thing, if that were to happen, that we were stuck at a low MNAV, I think you need to have the tools ready to defend against it. And I think the perfect tools are maybe DC-denominated convertible bonds, like Capital B is doing, for example, are a really good idea at this stage. So I think it's really a matter of the of the stage of the company, and the company needs to be big enough to have those tools ready if this should ever happen.
And if anyone, Metaplanet would be the next of these big active backs in terms of having the most Bitcoin to start doing that. Brian, what's your thoughts on this?
Yeah, I think the circumstances that would really cause MNAV to go down into that doom loop range would be if we had another Bitcoin bear market. If we look at some of the other cases of companies getting stuck in that range, it's more just because the company itself had problems. But for Metaplanet, I really have a hard time seeing us get down stuck in that range outside of a Bitcoin bear market. I mean, you always have to remember that Bitcoin is driving the show. Metaplanet historically has never seen a drawdown like that because it has never existed during a Bitcoin bear market. I would not be surprised at all if it did go sub 1x during a Bitcoin bear market, which is not to be bearish, but I think just it brings on the point that really these companies should be thinking about preparations for those types of scenarios now, and the widely anticipated potential announcement of preferred stocks in September would definitely be a step towards getting that preparation underway, and also with their paired with their cash secured put selling strategy that potentially gives them another way to pay the dividends on these preferreds during a bear market, other than having to sell shares potentially at a not favorable MNAV, is very compelling. And I think they will do everything they can to be prepared for such a scenario. But for now, I think that's we're not there yet. Bear market does not look imminent to me. So for now, they just need to keep doing what they're doing. And keep preparing for that rainy day also, alongside of taking advantage of the bull market while it lasts.
Yeah. So how sure are people right now? What is the sentiment on the September meeting being about approving preferreds? What's your guesstimate on that? That's what that meeting is about, and that's going to be the next thing. The preferred stocks in September voting.
They've been telegraphing it for months now. They've been constantly posting like, oh, look, isn't it nice that it looks like, dividends are popular in the 4% range. They've been dropping so many Easter eggs and hints. It's certainly, not guaranteed by any means, but I would be surprised if there wasn't at least some kind of announcement related to it, even if they're not fully ready to go yet.
And it's worth noting that I've seen some people talk about they could absolutely have been doing all the preparation in terms of the legal work and getting the approvals. So once they have the share vote approval, they can launch them very quick. So they don't have to go through another 6 months period. Just so we could see them this year, the preferreds from Metaplanet. Blake, what's your thoughts on this?
Yeah, I think getting MNAV is a little bit of a game theory aspect to it. I think because companies like Metaplanet is the leader in their market, they do use their equity, or people are trying to get into their asset, and it's the only asset they can get into in Japan to get Bitcoin exposure, which means that there's an aspect of like if there's something happening in the equity market, it might motivate them to get into a Bitcoin treasury company. So there's an environmental aspect to that as well that needs to be considered, not just if it gets to just kind of stall out. Something has to happen in their environment in the Japanese, which I don't think will happen. And then, it comes down to the velocity of that debt and equity wanting to come into, or the preferred stock in the future coming into companies like Metaplanet and MicroStrategy. So that's a factor as well of how much money, again, debt and equity can kind of come into the company. So I think also with a company like Summer Scientific, they're all competing for the same capital pools as Michael Saylor, which is a very competitive spot, right? Like he's doing the preferreds, and he's got all different kinds. It makes it very difficult for an American company that's smaller to get into that market. So if they hit the one MNAV kind of space, like it'd be much more difficult for them to raise debt and equity because there's a bigger player in town, so to speak. So I think that's something to really factor into trying to of a company, especially when it hits one MNAV. Does that make sense?
I did catch some. There was some also outage for you, unfortunately, which made it a little bit difficult. But what I'm hearing you overall say is, and correct me if I'm wrong, that that you don't see the MNAV going towards one being an issue for Metaplanet, and in US, others trying to go up against Strategy would have a challenge if because there's such a much bigger collateral balance sheet. Did I get that right? Or
$1 billion capital, both equity and debt or preferred stock. So that's the difference, is that they can do that much better than a smaller American company. They've set up those different products to be able to do that, and you can expect them to continue to acquire that through the preferred stock that they have.
another thing actually that is, I think, worth talking about in terms of Metaplanet and defending the MNAV, or in general just generating a higher yield, which is what will make people willing to pay a higher MNAV. So that defends the MNAV, and that is on their website. I looked at the revenue they're getting from the selling put options on Bitcoin, and it kind of translates. This was a rough calculation to about 3% yearly BTC yield, which is not bad. That's Strategy, I think, has done around 21% so far this year, and if Metaplanet does 3% just on the selling put options, that's a nice yield that makes it attractive climb. What's your we touch on a lot of new points here. Maybe something further you want to add to that, or any things you have on mind?
Sure, yeah. As far as MNAV compression, people know that. I mean, my stance is that it's inevitable for all companies as they get larger to some extent, right? That's sort of how the overall trend will look. Is there going to be a floor? Sure. I don't know what that floor is. I don't know. During bear markets, all bets are off, right? To a large degree, I think about MNAV not just about sentiment, but it's about inflows because these companies are selling into the premium. Most of the companies are. Metaplanet certainly is. And when the price action is down for Metaplanet, they do a lot less selling, which I really appreciate. A lot of us have seen the FUD that MicroStrategy's had to deal with in the past of, any red day, everyone's like, oh, Sailor's selling, which again, like I've mentioned before, is largely bogus, but it's still psychologically, there is that, oh no, is he selling today, even though the price is down? And, so Metaplanet, it's not on the 1 day. Now it's a sort of 3-day stepping average for the strike price, but it's still, they sell into strength, right? So they may sell 1 day a week when price is really stagnating, like now. I only have, one good opportunity a week, let's say, to sell, 5 or 10 million shares, something like that. And then when price action is really strong, then they can sell 5 to 10 million shares a day, if things are really strong. And so I appreciate that a lot, but a lot of what MNAV really is just soaking up regional inflows. And I think a lot of people really misunderstand that. So the inflows are required to maintain price, but to maintain price into some level of selling action. And the inflows ultimately are what enables a company to buy Bitcoin. Otherwise, where's the money coming from? Obviously it has to come from inflows. On any sort of reasonable time frame, it's coming from inflows. And preferreds are going to give another avenue for that. Preferreds are going to, market themselves to a very different customer than the people in Japan that are currently buying Metaplanet stock. I see it as really good because you have a high performer on the common shares, and then you have what we would consider in the U.S. to be a low interest rate preferred. I think in the recent interview, I think Simon was saying he was alluding more to it being under 5%. If they issue preferreds, so 5% being the high end of that probably. So when you look at a stock that was the best performer in 2024, and I think will probably be the best performer of any size in Japan in 2025. And then you look at the preferred products that are going to be such low yield compared to the performance of the stock, but completely selling to a different audience. Now you're not stealing inflows. You're not cannibalizing your inflows. So I think that is also something that people don't really understand and underestimate, even if they do.
Gotcha.
That point about cannibalizing inflows, I think is super important, because one interesting thing we just saw with the new strategy preferred stock, the one that basically tries to replicate a money market account. I think that, if I were Metaplanet, I would just skip over everything strategy did to date. I would just start with that one, because it's pretty obvious to me that some of these other ones just cannibalized strategy inflows, but this one is like a perfect complement to holding the volatile asset, because you've got your super volatile asset, and then you've also got your short-term money holdings. And those are the two things that really complement each other well. And I really don't think it's institutional flows driving these preferred products yet. I think it's largely retail driven. And until such time as we actually get credit ratings for these products the way that Michael Saylor wants to do them, I don't think there are going to be large institutional holdings, at least not yet. So if they launch that into the Japanese market alongside Metaplanet, I think that would be a stellar combination.
I think that makes perfect sense. I think it's a good point. I think that's very much the case. Ragnar, Blake, feel free to jump in. It doesn't have to be all going around the table. If you have, and when you have points, please feel free to jump in.
My question, and I don't know if Brian has any insights into this, is like, what would move the needle for I guess, Japanese to start to use some of that products that Sailor's already put out or Metaplanet might be able to put out. Like, what do you have any thoughts there of what we might be waiting for? And then, hopefully the floodgates can.
Yeah, to be honest, I don't really have as good insight into what Japanese institutions might be thinking. I would have to imagine that it would be a similar situation over there, that in order for them to even touch it, it would have to have some kind of blessing by a ratings agency or something. But what exactly that translates to in the Japanese market, I'm not sure about. Commented something else. A lot of people saying in the chat, why do you guys think that preferreds are happening in September? I don't think they are. Well, they might not. I mean, there's no guarantee that these are going to launch September or that they're even going to talk about it in September. I would be surprised if they don't at least mention it, but yeah, it's definitely not a lock that that's when these launch.
And go ahead, Anders.
No, I was gonna jump. So go ahead if you want to talk on the same one, and then also Ragnar. I want to, if you have an opinion, but Blake, go ahead.
Yeah, I've just heard a lot of. There's a huge. I think it was that the savers in Japan have about $7 trillion in cash deposits, so like in a bank account. You think about money might move into savings there, and I don't know if that compares to Americans, but it seems like a very high saving rate comparatively. So,
Blake, do you have any chance of switching to another internet, or because I did something last time? It's not super. That would be great. Thanks, Ragnar. You were about to say something.
Yeah, I mean, the Japanese are really a savings nation, and I think that's of course a super great pool of capital to tap into. But I also had another thought. So basically, what Klein was saying, that the inflows lead to MNAV, but the inflows are all secondary market, so they are basically changing hands. Now my treasuries did private placements. What if a portion of these inflows were actually primary market? Because then they could take the money and immediately purchase Bitcoin for it. Of course, then the question is, what effect would that have on the general stock volume and the general MNAV? But let's say, hypothetically, that half of all the money that we purchased on the open market, if we did it in a private placement, then they could have taken the money and bought Bitcoin with 100% of the proceeds. So the question for me is, why don't these companies do more private placements or subscriptions, not private placements, like the stock subscription rights, more stock subscription rights, so that don't have to purchase on the open market, but we can add directly. That's my general question.
So I presume this is for you mean for Metaplanet, right?
Exactly. It's just a general thought, because the stock market is just changing stocks from one person to the other. It's a secondary market. And the question is, why don't treasuries try to tap more into the primary market by giving out subscription rights, trying to get more private placements? Why does it have to be completely based on the moving strike warrants? That's just a question that I ask myself.
I think that question can be answered by either Klein or and Brian, but I don't have an answer for that. Klein and Brian, do you guys have some thoughts there?
I have a complete answer, but I have some thoughts. I mean, basically, private placements are the sole funding method that we are seeing from some of the newer, smaller ones. The ones that started as nano caps that are, say, like sub 1,000 Bitcoin. It's all private placements, and I think that the challenge is, at least if you're growing only by private placements, I think you hit a point where it's difficult to scale that. So I think the interesting question for a company the size of Metaplanet is how are they able to execute that at scale? Are they able to do it in a big enough way that moves the needle and is also not like super burdensome on an administrative side? Because there's just a lot more overhead for trying to go out and pitch investors and build the pool to do it that way. So those are questions I don't have the answers to, but those are just my first thoughts on it. Is how much sales burden would that add to them to be able to execute on that?
Gotcha, Climb. I don't know if you have any thoughts on that.
Yeah, I'm not sure directly. I mean, I know one kind of piece to this puzzle is Simon visiting Switzerland recently, and it sounds like he was probably talking to some institutional investors, and that's one reason I want to get a Bloomberg terminal. I just have to have them call me back, I guess. They didn't call yesterday, but I want to be able to see the sort of things that typically someone posts once a month, where it's I know they don't update it every day. I realize that, but I still want to be able to see it when they do update it. I want to be able to see it on my own. And there's some now you see like Fidelity and Interactive Brokers and Schwab, and you see maybe Fidelity has 80 million shares of Metaplanet or whatever. And of course that's essentially retail, mostly or essentially completely retail. But I would like to do a better breakdown in the future. I think Metaplanet's in something like 40 different ETFs, and I'm curious if there's going to be any investments that kind of result from Simon's recent trip that end up making it onto that top 20 holders page. And a lot of this it's an attention economy. So there's all the advantages, all the reasons I could talk about why I think Metaplanet's undervalued, why I think it's a great investment, why I think it's going to $300 to $400, in 5 to 7 years, let's call it. Short term, I'm not that concerned with, as long as the trajectory stays right on sort of the chart I shared earlier. So we'll see what happens, and I think that a lot more people are coming into this. And for me, and for a lot of us probably here, this was my first international stock. So for at least for us in the U.S., like we have such strong. I mean, there's thousands of companies that you can research, and if you're looking for something that might double in the next few years or something, I'm not saying it's easy, but it's not tremendously hard because it's a really, really big dartboard. And the bullseye is really, really large. There's so many winners typically in the market. A lot of countries, that's not the case. In Japan, it's certainly not the case. So Metaplanet standing out in Japan is really important. Another thing a lot of people forget about. And yeah, all the cash, 7 or 8 trillion that Japanese retail have in cash or cash products that they could. I mean, I would love to see them do something like Stretch. And I'll say that while I didn't think that I would get any of it, I actually did dip my toes in a little bit. I'm keeping most of mine in standard money market, but I did put a little bit because in today, actually, the idea is that it reprices to sort of that 99 to 101 loose peg at some point, and it's currently trading at 91 or something. So there's that bump plus the monthly payouts that right now would be something like 9% a year, I think. So, I'm not trying to shill that, but I would say that, yeah, I'll reiterate, I can't remember if Brian or Blake had said it earlier, but that it would be nice to see Metaplanet consider copying that, because there's something to be said about having the price stay fairly pegged instead of other preferreds that really, really move with interest rates. If that rates are about to drop, strive for something may double, eventually. So, that's a plus for some people that are betting on the drop. But if you're not wanting to bet on which way interest rates are going necessarily, then it sounds like, and I don't know very much about all this stuff. I just haven't had a whole lot of time to dig in, but something like Stretch would be really nice to kind of keep your principal there. So even if your rates change, your principal, is essentially static. And you don't have to worry too much about which direction rates go. Of course, you'll get paid different, differently. If rates go up, you'll probably get paid more. If rates go down, you'll probably get paid less. But as far as your capital, it's capital preservation, and that's a very different thing than just income generation with huge capital risk based on whatever the Fed does.
Yeah, you're actually just rotating people around here. I think you're spot on, Climb, and the market has told us that yes, absolutely, there's clearly a big demand with oversubscription and 2.5 billion or so going into stretch that keeps the principal but varies the interest rate instead of all the others that go up and down quite a bit. So the market is saying fully in agreement there. And if you look at something like Strike, which has the built-in call option, call it if you will, has been up at $131, and now it's at, I don't know, $104. So it's fallen quite a bit together with strategy falling. So Stretch, which keeps your principal more or less intact or very, very stable, but just moves the interest rate, and it changes, adjusts every month. Clearly there's a very big market for that, and it makes sense.
And I want to say that the way I've seen these other products talked about, the other preferred stocks talked about, is essentially that's what people are trying to do with them to begin with, is try to use them as a place for short-term cash holdings, but they weren't designed for that as well as stretches. And I think part of there's some of the evidence that that's the case is that there's a huge rotation out of these products into stretch when it launched. Of course, we saw that with previous preferred stock launches as well. There was some capital rotation, but it's my opinion that stretch is going to far outperform the others in the short term in terms of adoption. So I'm a big fan.
And why is that, Brian? Again, you said it was because the volatility of MicroStrategy or strategy, and then the kind of non-volatility and just returns of the new preferred product. Is that it?
Yeah, basically, I think what people are actually trying to do with these preferred stocks is use them as short-term cash holdings. And if you're using it for short-term cash holdings, you don't want volatility in your principal. If you get some variability in interest rate, that's okay. But at the end of the day, if it's cash that you want to use the next 2, 3, 6 months, you don't want a product that has, say, 20 vol risk in the principal for something you might get 2% of a dividend payment on in that over that time frame. Mm-hmm. You want something that's going to be much more stable than that. And just given that seems to be what I perceive is the popular use case in the market, I think that's why that particular product will be a lot more popular than the others, at least in the short term, until such time as something like institutional grade credit ratings happen for the other ones. Then maybe institutions will be more interested in the more straight bond-like instruments. But insofar as I think retail is really driving it, it's that short-term cash holdings paired with the risk-on assets, I think is the real use case that there's good product market fit for right now.
Mm-hmm. Okay, thank you. And then I have a question, and if I can ask is, what do you guys think about products like this where traders might rotate out of, let's say, Bitcoin or MicroStrategy or a Metaplanet into something safer, like one of the preferred stocks, as opposed to moving your money into straight cash into a traditional bank? What do you guys have any thoughts on that, and what that might mean for the bull market this time?
What I thought experiments is actually the other way around. Imagine you're at a bull market, what people think is a bull market top, and people are rotating cash out. What if instead of like cashing out of whatever, say, it's a Metaplanet show, so let's use Metaplanet as the example. Instead of people thinking they're selling Metaplanet at a top and rotating into cash or whatever else they're going to rotate into, what if they rotated into Metaplanet's version of Stretch,
right,
and give it cash to buy Bitcoin all the way down?
Right.
Well, that changes the picture quite a bit.
Right.
And there's and then there's the use of something like Strike, where while it may be more variable in the value than I could have expected, but something like that I could see myself using going into what could become a bear market, because there's quite some downside protection, a little bit less so the last week or so maybe, But if the bull market continues, they will also continue because it's not only fixed income. They're also driven by the value of MSTR, because 10 strike can be converted to 1 MSTR, which no one will do, but that will push the price. Ragnar, do you have any thoughts here? I want to give you a chance to jump in.
Yes, I mean it's great that the ecosystem is really being built up, and I also like it's another product. It's wise. It's based on momentum strategy, where you have positive momentum, you have Bitcoin, and once the momentum is going negative, it's a stable coin. So interesting in a scenario where we have a blow off top, but you don't know where the exact top is. Could actually first move to BITC. You still have Bitcoin, but once the momentum breaks, you basically have a coin, and that's the negative momentum confirm. You can take stable coin and turn it into something.
Yeah, unfortunately, we've had 2 people with internet problems tonight. Ragnar cut out. Maybe his data plan on the beach is out. Sorry about that. This is not planned for. Obviously, we're trying to do the best we can to keep a good quality and for everyone to watch.
Well, Climb, it sounds like you've got a big cash position. What are you, and you're into Bitcoin treasury companies, so I've heard. What's your thought on, individually using these products as Ragnar was saying, and then what is your thought on, how that might change the market and change the cycle this time?
It's all good for liquidity. If somebody moves, let's say if you think that interest rates are dropping and you hold something like Strife, if you hold something like Stretch, you may be like, oh, they're about to, if you're the sort of person that trades based on what's about to happen, which I'm typically not, but you may get out of something that's more pegged like Stretch will be. The interest rates for inflows from MicroStrategy's perspective, it's going to be the same. They're selling it at whatever percent. They just have a bunch of different levers that they're sort of based on different times. That's just how I think about it. So if interest rates are about to drop, and as they start dropping, and the products that are paying $8 per year or whatever it is, regardless of the price of the per share, then the price per share is what fluctuates, and people are going to trade that. So there's going to be rotation from Stretch to something like Strife. I would imagine, as interest rates are dropping and people get hyped about, oh, it's not just about the principal, it's about either locking in an interest rate by buying before something like that goes up, essentially, locking in an interest rate on your initial investment, or riding that wave higher as it reprices like a bond would, as interest rates drop, right? So I'm by no means an expert. I'm just kind of pushing on this stuff in my head and see what kind of pokes out the other end. But the timing is huge and liquidity is huge. So rotation between something like Metaplanet, and if people are like, hey, this is where I would sell Metaplanet anyway because this is the top of the bull market, I think, and maybe it's the pi cycle top, or maybe it's the power law model, or whatever it is, or just somebody gets an itch and they want to sell, then they sell, and maybe they put it in cash, maybe they put it in the preferred product, and maybe it matters if it's pegged or not on the principal, the price per share. But yeah, I leave enough cash for all future expected taxes and obligations for the next year, and I don't want to. Some people don't agree with this, and that's fine. But from my perspective, I don't want to put everything in the Bitcoin bucket, because I'm not going to go from being way into retirement to having to work in a steel mill again to pay my bills. I'm not better than that. That's not what I'm saying at all. It's just, it would be very foolish for me to risk what I've already got here. And so I have to be careful, and I try not to put, even though I believe in Bitcoin and I believe in these companies, certainly, especially Metaplanet, like by far, that's my favorite, obviously, but I don't want to risk everything 100% and risk everything I have. So I'm going to be very careful about, even though these companies do have preferreds, and a lot of them, especially in the US, are going to pay better than a typical, standard money market that has mostly treasuries. I still don't want to put everything at risk with Bitcoin. And again, I know that's blasphemy. I get it, but like, just psychologically, something's going to fail in the future. And I don't think that thing is going to be Bitcoin. I think it's going to be fiat, essentially. I think there's always probably going to be some version of fiat, because people are always going to want, I don't know how debt works, without fiat, let's put it that way. But, how can you have, I don't know. It gets really confusing. I don't think anyone really has the answer exactly, but yeah, I will probably invest in some of these preferred products to some extent, but I just always want to be careful and not throw all my cash at it and think that it's it's zero risk, because there is custodial risk. There is, and it's not just somebody or, you could lose keys or have them stolen. There's sort of two options there potentially, right? So like, you don't have to have them stolen to lose your keys. And I don't think that would happen for any of these companies, but is it going to happen in the next 100 years to somebody? Probably, something's going to happen to somebody. It's just a game of probability and dodging the fire and dodging the landmines. Even if some were buried 50 years ago, there still might be a landmine there. So, it's rare, but anyway, yeah. So for me, it's kind of, I guess, 3 buckets right now. I try to keep it to 2, Metaplanet and cash. I try to keep cash minimal, but just to ensure that I don't have to worry about day-to-day fluctuations, sort of timing risk, because I'm going to have to take some money out at some point for taxes and stuff. But now I've kind of introduced a 3rd bucket. We'll see if I keep the 3rd bucket for long, but it's right now it's stretch. Who knows how it goes, but I'm playing the short term, it trading under its future peg. And then also I can get the monthly interest until then. I expect over the next few weeks for it to kind of step up. That's just my thought process based on IPO raised capital, selling a little bit every day. Looks like $2.5 billion was raised, right? And like $100 million traded yesterday, OTC. So, at some point it won't be OTC, it'll have higher volume and stuff too. But yeah, so right now, I don't know if that answers your question, but right now I have 3 buckets. I'm just careful to size them sort of appropriately based on my personal risk.
Okay, cool. Thanks for sharing.
Yeah, makes sense. Thanks for that, Climb. Unless somebody want to throw some comment on topic at hand, Ragnar, you were back. Then I'd switch over to talk about something that someone mentioned early on about MNAV. But Ragnar, Brian, you guys want to jump in with anything here? Nope.
Yeah, I think I will just echo Climb's risk management. I'm also thinking about that. So of course, I never want to be 100% in one asset class. How I think about it is I want to be 80% growth, because I'm really ambitious and aggressive, but I also want to take profits on the way up, and I will do it gradually. And I want to have 20% outside of my growth buckets. And my growth buckets are the BTC ecosystem and the Elon Musk ecosystem. I want to be 20% out of those ecosystems, because with each ecosystem, there is a greater than 0 chance that something blows up and something happens. So I just want to be on the safe side and also not be all in anything. I think it's foolish to be all in anything. So I very much like Climb's thought process here.
Risk management is really important, because things do blow up every now and again, and you don't want to blow up. It's not fun.
I want to blow up the fiat system, so I'm all in.
that I'm all good with.
It's not the best risk model, but it's the most. Let's do this. I'm tired of this system. Let's go type energy. So there's a little bit of like, yeah, this isn't the diversified way to do things, but this is like, okay, yeah, this is how I want to do it. So it's not the most logical in terms of diversification, risk management, but like, it comes from a place of anger at this current fiat system. So it's like, all right, I want this thing to burn as fast as I can make it burn. So just there.
I hear you, Blake, and that has been my position for a very long time, and still is. But I do want to get to the level of Ragnar and climb at some stage where I can have another bucket. That would be nice. Someone mentioned, I think it was you, Climb, spoke about MNAV and MNAV compression earlier on, and the MNAVs are different. So Ragnar, you said it was 3.4 right now, fully diluted for Metaplanet. Strategies is a bit below 2, is probably around 1.9 somewhere. I do want to talk with you guys about and hear your opinion on. I think we can all agree that in a bear market, they could go below 1. And that's something everyone has to factor in their risk management. Speaking of, if you are all in on Bitcoin accumulating companies and there's a bear market, that could be quite a heavy drawdown in your portfolio. But in terms of the end game, I don't see the MNAV going to 1 in the end game, because if you take a company like Strategy, maybe in the end game, let's say they hold 500,000 Bitcoin. I think they might actually get there. They won't be valued at 500,000. Their market cap will be higher than 500,000 Bitcoin if that is where they reach, because the value will be the 500,000 Bitcoin on the balance sheet, but also a premium assigned to the revenue they can generate with that 500,000, whichever way they may utilize that. If it's lending, if it's acting like a bank, financial. So my personal gut feeling, and it's very hard to say anything at this time, so it definitely is just a gut feeling and throwing a dart, would be a end game hyper Bitcoinization. Fiat is gone. MNAV around 1.5. I think that could be realistic, but I'm curious to hear what you guys think.
Yeah, I think that probably see it more or less the same way. Yeah, if they wind up in a situation where they're basically functioning like a bank does today, then price to book somewhere between 1 and 2, but not exactly at 1 seems a reasonable place to end up at.
Yeah, so between 1 and 2, probably.
Yeah, so if you're saying you think 1.5 is where they could end up, I mean that's within the range of what I would consider plausible.
Is that because the use case of current banks is kind of the logic or use case that you're using?
Yeah, basically just presuming they wind up functioning like a bank. They might not. They could come up with some other business model, but it's not really clear what that would be. I mean, the most direct way to monetize the Bitcoin is by acting like a financial institution. If they were to say, oh, we're going to start up a semiconductor factory, that'd be something else entirely, require an entirely different kind of expertise to do. So it doesn't quite seem like the logical conclusion for these companies, but maybe some of them will try something like that.
Yeah, it's interesting to think about it, compare it to a bank, and maybe it's an end stage after hyper Bitcoinization, but it's also interesting to think about it as a growth company, but then also a growth company that's acquiring the scarcest asset on the planet, which I think is like an extra cherry on top to maybe a higher MNAV premium, because let's say that scarcity or hyper Bitcoinization happens into these Bitcoin treasury companies where everyone's trying to get into them because they're the only things generating, or the only businesses generating Bitcoin well, Metaplanet doing 300%. It's interesting that could add more higher valuations to it because they're growing so much. And then the only real systems to really generate that yield, that you're going to want to get into that, as well as you think about the months to cover. The premium right now are measured in months for these Bitcoin treasury companies versus Apple's PE ratio is 30 years for their earnings to catch up to the price. What's your thought on that, Brian, as on the other end of the valuation spectrum?
Well, I think that it's a matter of where are we at in the timeline. I mean, right now, nobody's thinking about these companies like banks or financial institutions. Right now it's all about MNAV and growth and months to cover, and all these things are very relevant. But this is an arbitrage on the traditional finance system that will close eventually, but that could be 10, 20 years from now. when we get to a hyper Bitcoinized world, if we get there, obviously no guarantees, but you won't be able to arbitrage. You say essentially the rate of growth of Bitcoin matches, global growth in the economy every year. The spread will be too narrow to arbitrage against interest rates in any meaningful way. I don't think selling equity at premium would be in a thing in that type of a world to try to acquire more Bitcoin. I think this is a business model that exists in a moment in time. That moment in time could be 10, 20 years. I don't think it's going to go away anytime soon. But eventually that arbitrage will close, and 10, 20 years from now, if when we get there, the companies will have to do something else to generate revenues.
Thanks for that, Brian and Blake. I want to give a chance to Ragnar. He's headed back to the beach to recharge. So Ragnar, thanks for being on, man. If you have some final words, and again, I just want to say to everyone, you can see Ragnar's handle there on his account on X, Roaring Ragnar. Definitely worth a follow for Bitcoin accumulating content, Bitcoin accumulating companies content. Ragnar, the mic is yours.
Yeah, so first of all, maybe if people didn't see it yet, I open sourced my comparison spreadsheet. So if you go to my pinned tweet, it's there as a Google sheet. You can download it, edit it, so it's all there. And I think the other point, maybe spend the last minute, is there's really like two camps right now. There are people that think that operating companies offer a great advantage now in the short term. And I strongly disagree with that, because I think the treasury business model is way superior, and maybe for the next 10 or 20 years, as Brian said. But I think there will come a time after the gold rush where basically the generation of free cash flow, or basically free cash flow that then can be turned into Bitcoin yields, will be the primary source of Bitcoin yields. And I think that maybe a company like Tesla in the future could actually converge to become a part Bitcoin treasury company, because if at one point they will generate so much cash that they don't know what to do with it, then I hope that they will choose to park it in Bitcoin. So it will be really funny to see Tesla converge more into becoming a treasury, and companies like Treasury and Metaplanet to converge more into building and buying cash flowing businesses. So I think that's the future, and all of this, of course, will converge with AI and with hyper growth. So I think we will, have a lot to talk about in the next 10 to 20 years. So hey, was good talking to you guys. Really fun to be here. Sorry for the bad internet connection. And yeah, speak next time.
Yeah, thanks, Ragnar. See you next time.
It's great to have you on the show.
Climb. Yeah.
Yeah, that was actually awesome. So I like that, and I think that's probably something a lot of people don't agree with. But I agree with Ragnar there, and I've never heard it said so well about sort of the convergence of traditional companies to adopt to kind of become Bitcoin treasury companies. Not leveraged or not doing it solely, but still doing their main business, but just kind of giving up on fiat essentially and moving to Bitcoin. The whole melting ice cube idea. And that was Saylor's first idea. He wasn't trying to turn his company into a totally Bitcoin company, like where that was everything they did was Bitcoin. I mean, he still had the software business, and they still have it now. But, I think as people have seen I haven't seen all of them over the last few years, but I've seen, quite a few of the earnings presentations by Saylor. Slowly it's become more, not where just Bitcoin was the main thing that moved their price, or that's where all their fiat converted into instantly, essentially. It's just less about what they're doing. It's less about their offices. It's less about their I remember when people would talk about their they were like switching right from like something to a cloud subscription model, or to like they switched something, right? That was actually a big topic like a year ago or whatever, right? Like what percentage of their subscriptions have kind of changed from from A to B, and I don't remember the details, but like now nobody cares about that at all. And so it's totally changed. People now know how to price MNAV, not perfectly. If retail understood it better, they would never price MNAV much lower than the future expected yield on any of these companies. That's the most mispriced, like the easiest way to state the mispricing. And that's not even well, it kind of is assuming, right? That's the worst case where MNAV goes to 1. Because if MNAV goes to 1 eventually, if it's trading at 3 MNAV right now, so trading, at 1x, it's sort of real value and an extra 2x, right? So it's trading at 3. Then they better at least be able to produce, in my eyes, 200% yield in the future, triple their Bitcoin per share. It's sort of an easier way to put that. And that's the most asymmetry that I can find. And so, a lot of people want to argue about, MNAV going down to 1 in the future. I think it'll compress in the future, but I don't think that it's going to go down to 1. But yeah, sort of assume that. And then if the company you think can still provide 500 or 1,000% yield from where it is today. So, let's just call it a 5 to 10x of Bitcoin per share to keep it simple. And if it's trading way under a 5 MNAV, then that's a steal. And that's how I see it. If a bear market happens, maybe they hibernate. I think issuing preferreds earlier makes a lot of sense. The Bitcoin CAGR has sort of gone down. It's still really, really high, but it's gone down from its early days when it was trading at a penny. So if you kind of zoom out and imagine a chart that looks at like a few decades, and you imagine the Bitcoin CAGR going down. I'm not saying that has to happen, but that's sort of been happening, and it probably will, unless there's a sort of complete death spiral in fiat, and that may happen. I'm just not going to be the one to predict what year, because things can go on a lot longer than people expect. But yeah, as that CAGR drops, the preferred profit, and this is really key, that preferred profit diminishes. So, and that gives, we'll see what interest rates do in the future in the US versus Japan and other places. But right now, Japanese interest rates are like 0.5%, I think. In the US, it's, 4%-ish. And that gives preferreds a huge advantage, because they can issue preferreds in Japan at 5% or less, probably. They can issue them at whatever they want, and then the market will price them however they want, depending on what type of product they issue, I guess. But yeah, so you have that spread of the Bitcoin CAGR, 80, 60, 30%, 20, eventually maybe it'll be 20%, maybe it'll hit 10% eventually. If everyone's holding Bitcoin, then the inflows have already happened. I don't know what we're pricing things in at that point, but let's just say that the Bitcoin CAGR drops eventually. Preferreds diminish their benefit. So the prime time is really as early as possible, and that's why I think Metaplanet's going to do it as early as they can, which is likely in September. If we have to wait till January or something to hear something, or maybe March, then that's fine. But I wouldn't be surprised at all. I think there's 75% chance we see it in September. And also, I don't know if we'll get any sort of hint. I know that with those shareholder meetings, I think in the past they typically state what the agenda is going to be before the meeting. So I don't think people go walking into those meetings blind. And I'm not sure about this, but I believe that it's sort of typical for them to do like a 3 to 4 week in advance, which would be pretty soon here in the next like week or two, maybe. So I'm hoping in the next week or two, maybe during the whole Q2 earnings presentation. I don't remember when that's sort of going to be, but we may hear one way or the other about that, which would be exciting, assuming they're going to have people vote on it. But again, they can have people vote on it just as a measure to get the red tape out of the way. That doesn't mean they're going to release them the next day. So there's no reason to me not to vote on it. But of course, I'm no expert there. So if they don't have people vote on it, there's probably a good reason. But yeah, what Ragnar said was really interesting about that convergence, about, real world value matters. And it's not like there's going to just be infinite value in Bitcoin treasury companies and like no value in, opening up a fast food chain. There's going to be some sort of convergence, because that's how asymmetry works. That's how arbitrage works. That's how the world works. And this is really an amazing time. The next 1 to 2 years, 5 to 10 years, it'll diminish over time, the opportunity. But I think that this is one of the best times right now. And if there's a bear market, that starts next month or next year, that's fine. My plan is to hold Metaplanet. And I hope that Metaplanet largely hibernates in that sort of situation. If their MNAV suffers, if MNAV goes down to 1.5, I would prefer they don't issue anything and just, wait until inflows begin again, because inflows aren't happening when everyone's pulling their money out of stuff. And so they can't turn that into Bitcoin. Now, people might be pulling out of Metaplanet and turning it into Metaplanet preferred. So there may be some inflows there, and that may keep yield. And in turn, that would support, a 1.5 or 2 MNAV maybe during a bear market. Who knows? It's sediment, trust, and money flows. But yeah, we'll see. So I know that was kind of all over the place, but there it goes.
No, love it, Climb. Always great input from you, Brian. I don't know if you have any thoughts on that. Otherwise, you did bring up I know there's
actually two points that I would like to pull out and touch upon. The whole idea of is a cash flowing business important? I think the conventional wisdom on that has really changed a lot lately. When these companies first came out, there's lots of questions about the underlying business, but I think now it's kind of recognized that there's an argument that the underlying business, if it's actually a drag on the stock performing like a Bitcoin proxy. It reduces the volatility of the asset, and that if you really want to make your stock trade like a Bitcoin proxy, then you actually want the underlying business to be as small a percentage of the valuation as possible. So that's point number one. And the second one, this point about Japanese interest rates is actually another reason why I think the stretch product can be better for Metaplanet to launch in the short term. Somebody posted something the other day about how actually at the long end, the long-term interest rates, the 30-year interest rates, the further out you go out in the yield curve, the more interest rates converge between Japan and the rest of the world. So if you have potentially an infinite duration asset, like an infinite duration debt-like instrument like Strife, you might actually counterintuitively not expect the interest rates to be as different as you might expect. However, on the short end of the curve, that's really where Japan is controlling the interest rates. That's where in the US we're sitting at 4.25% to 4.5%. In Japan they're sitting at like 0.1 to 0.25%. Or I'm not sure if that's exactly what it is, but it's in that ballpark. So that stretch being designed to mimic a shorter duration instrument, which is where we see the largest spread between Japanese interest rates and the rest of the world, is yet another reason why I think that could be the most successful product for them to start with in the Japanese market.
And unfortunately, it seems now we lost Climb. Wait, no, he's back there. I don't know what happened, but Climb, you there?
Yeah, I dropped out for about 20 seconds. Starlink.
Okay, Starlink. Otherwise, that has been perfect. We'll say it. The Starlink has been great. Sorry, Brian. Did you finish your? You finish your?
Yeah, that was the end of that point.
Point, right? Yeah. All right. Anybody want to pick up on that?
Yeah, no, that's a very interesting point, Brian, that you brought up. And I was pulling up on Grok the amount of deposits that we have in the United States versus Japan in banks. And we have 10 trillion here in the United States savings for about 350 million Americans. And in Japan, it was about $7 trillion in value. So it's interesting to think about how successful that product might be. And I know Dylan had mentioned that when that product launched and it was upsized to 2.5 billion, he made a comment like, "Hey, this is noted." And so that's, it sounds like they're kind of in line with what you're talking about, Brian.
Yeah, absolutely.
Well, the future is bright. The future is interesting. Brian, also, I know you wanted to discuss about the interview that Richard Byworth had with Simon Garowich, the CEO of Metaplanet, recently, and some thoughts on the subsidiary they're opening in US. Do you want to talk to that a little bit?
Sure. Yeah, one of the interesting points for me that came out of that interview was some of the reasons for why they're opening the US subsidiary. And the main thing that Simon talked about was that they're actually running into liquidity constraints on the buy side of their operation in Japan. They're having troubles getting enough liquidity to buy the Bitcoin in the volumes that they need it now. And so he highlighted that as a reason to come to the US and to access Bitcoin through US-based exchanges to get the liquidity that they need. And, I have to think that also capital raising will be a part of it. Perhaps that's not what they can talk about yet. There's, these public companies have a lot of restrictions on what they can talk about. So I have to think that capital raising will be a big part of it, even though he didn't highlight that. But this point about the liquidity on Bitcoin, I thought was very interesting.
Yeah, that buying Bitcoin, they were running out of Bitcoin to buy in Japan. That is maybe an overstatement, but there was they were moving.
He went so far as to say that he thought that Metaplanet itself was absorbing most of the liquidity for people who want to trade Bitcoin in Japan. So that's quite a statement.
Yeah, that is wild. So yeah, Klein Blake.
Yeah, I mean that would mean the spreads would be horrible. We'd see. I can't remember if it was like Singapore or who, maybe 5-6 years ago, like in the Bitcoin eco space. Maybe it was like South Korea, but like they would always be $500 or $1,000 higher or whatever percent higher on a Bitcoin price. And you don't want to see that with if a company that's buying Bitcoin. So you don't want to see the Japanese daily market price to be a few percent higher because Metaplanet is the biggest buyer every single week. That's just not good for business. It creates more drag. It's just more friction. So moving that part of the business to the U.S. and then talking about the second sort of arm of that subsidiary, or however you want to say it, that is going to be doing the same thing for option sellings. And a lot of us, like in the Dojo Discord, had been talking about that being very likely to be in the future about 2 months ago. So it's neat now to see that that's officially that they are doing that. I mean, that makes sense. Like, unless there was some tax reason for the company for selling options on US. So like, unless there's some weird thing like that, I couldn't imagine them not doing it. So it's really good to see them go ahead and do that.
Nice. Anything else, Brian, you want to talk about from that interview? I mean, those are great points.
Yeah, just one other point related to the U.S. subsidiary. There was a post about them moving shares of. It was a little bit unclear what exactly they're doing. There was a share movement from, I believe, Metaplanet to the new entity in the United States, and it looked like what they're doing is issuing shares or moving shares of this new entity itself to the company in the United States. It's a little bit unclear exactly what's going on there, but I think basically the upshot is that there's the seeding of this new company with capital is underway, and we should probably start seeing activity from it sooner rather than later.
Gotcha. Climb, Blake, feel free to jump in if you want to comment on that in general at any time, of course. Nope.
No, it's just starting to, interesting to see how much Bitcoin, these Bitcoin treasury companies are accumulating over the ETFs. I think that's just a really interesting metric. That's my only thought there.
Nice. Yeah. I guess. What is your thought? What's your conclusion? What are you seeing there of a trend?
But it's a fast growing trend, and I don't think it's going to stop. I think they found product market fit, and it's just going to go to the moon. I think we're going to see hyper Bitcoinization happen through these Bitcoin treasury companies. So prepare accordingly. That's my thought. And that's why, I think it's really hard to figure out what the MNAV and these metrics are. I think it can really blow out if the CEOs or the companies aren't obviously using the premium to buy to buy Bitcoin and generate that yield, which they will. But it's interesting to think about if they get the preferreds and things like that, like how much demand would come through these Bitcoin treasuries and how the valuations and growth can go, exponential or very high, as Climb's graphs kind of allude to.
Yep, very much so.
It is fun to imagine the start of a bear market. I'm not saying it'll happen like this, but imagine the start of a bear market, and maybe Metaplanet is, maybe it's trading at $50, sort of, before things start going down across the board, in the Bitcoin spaces or whatever happens to the world. So then you have people that maybe, sell at 50, sell it at $40 or something like that. I'm just throwing numbers out there, but And then some of that money, because it'll just sit in cash. It's like those people don't want to invest in anything because they just got their money as cash. And so they want to play it safe. But then they realize, oh yeah, like I don't think the company's failing. This is just a bear market, MNAV compression, whatever standard stuff, right? There's no reason, the company can stay. A lot of people look at like the average price that a company pays for Bitcoin, and unless there's something tied to that, like unless that Bitcoin is used as collateral and there's a liquidation price, I don't care what price they pay for it. Now, of course, I want them to buy as much as they can, but like the price that they pay for it doesn't matter. Because if you look at the dojo scrolls of truth, right? You look at the stock price equals Bitcoin price times MNAV times Bitcoin per share. That's just how the ratio is. Like if you cancel everything out, it turns into stock price. Simple, whatever. And if you think about during a sort of the start of a bear market, you actually may end up with a lot of outflows of the common shares. In these companies, let's just talk about Metaplanet, but you may end up with some. And if the company has already a preferred product in place that's fairly successful, right? And people still believe in the company. They just think they also maybe believe there will be MNAV compression during a bear market, which makes sense. Otherwise, where do the inflows keep coming from if it's, a bear market and prices are going down? So you'll end up with this weird situation, I think, where people sell common shares, move them into the company's preferred shares because they still believe in the company. And then that acts as inflows, which then generates kind of a yield, a short-term yield burst. But interestingly, that actually moves the 1 MNAV, the 2, the 3 MNAV, whatever those prices are, it's going to move those up. So that rotation, what we talked about earlier with liquidity and sort of moving between these products, and people see that a lot with strategy, with people, maybe selling MSTR and buying any of these preferreds, right, for different reasons, whether they have convert or not. And something similar may happen with Metaplanet, but that is good for the company because a lot of that increased volume, wherever the spotlight is, wherever that movement is, maybe you have outflows from common, but then you have inflows to preferreds. And then having that other lever for inflows to move when money gets scared and wants to move from one to the other, and then it moves back a year later because, now they think, the bull market's back on, right? Those inflows can really be captured and turned into yield. And then that just raises the 1 MNAV, 2 MNAV, 3 MNAV price. So, it's going to work out in both directions. Having those multiple levers is super, super important. So, I know maybe people find it strange listening how much we talk about preferreds, and I'm still very much a student. Like I'm just trying to pick up what I can and imagine how this stuff must work. But whenever it does happen, it's going to be a game changer. And I think it also attracts a lot of people that like a company like Strategy because it's cemented. It has that sort of MNAV floor protection. If you think of the yield products like that, they're not perfectly that way. That nothing's 100%, but to some extent it is. It can still defend MNAV. You can issue preferreds. They're self-healing products to a large degree. And you can issue preferreds if MNAV goes below 1 and buy common because it gives more Bitcoin per share than buying Bitcoin. As long as MNAV is above 1, it doesn't work out like that. But, unless there's just some reason for morale for a company to want to do that, they'd be essentially burning money. But yeah, I'm excited and I can't wait. Right now, it's largely a story for Metaplanet for me about inflows and about sponging up all this money that has been underperforming in Japan, slowly but surely, right? And then with companies becoming having a lot more international investors. I mean, I don't know that I've heard of other companies just having this many like U.S. investors if they're a Japanese company. And maybe I'm just naive. Maybe that happens all the time. But at least for me, at least for retail, it seems there's tens of thousands of us now that have looked into, signing up, whether we have Fidelity or Interactive Brokers or whatever we have. We now are looking at these other companies. And, for me, it's Metaplanet because the story makes sense. I slice it and dice it a bunch of different ways and it makes sense. We're nowhere near saturation for Metaplanet's ability to collect more inflows and buy more Bitcoin, generate more yield. So I'm here for it. And, I'm going to squat on it for quite a while.
I know you are, and you were actually part of, I guess, turning the spotlight on Metaplanet back in late April, and have been instrumental in the amount of American investors, American-based investors. So we're thankful for that great work climb early on, and Brian and Blake for your thoughts ongoingly here. Brian, earlier also we spoke about a beautiful piece of FOD killing. Do you care to comment on that?
Oh yes, the PFIC FUD. There was concern that Metaplanet might be classified as a passive foreign investment company, which would have some pretty onerous tax reporting issues associated with it. But Metaplanet has come back. They told us before they didn't think it was an issue. They issued a new report yesterday saying that, based on their determinations, they don't think they're qualified. They don't think they qualify as a PFIC. So that is good news. That is that FUD hopefully put to bed. One of just an interesting tidbit on the mechanics of that. One of the things Simon said in the interview is they classified their Bitcoin as inventory, I believe, is what he said. It's accounting stuff. I think it's all just accounting stuff to try to make sure that they're not running to this issue. But anyway, looks like FUD is dead, and hopefully we're good to go here.
Yeah, once again, the FUD is dead climb must have been nice for you as well to read.
Yeah, I've never been worried about it, but I've also told people that, when I find a 10-bagger, what's the phrase, like, don't let the tax tail wag the dog or something like that, right? And I made that mistake last year. I made that mistake in November when I had 1,000 leap options on MicroStrategy. And MicroStrategy, the day before, I did what I thought was the right thing. I thought it was the top, and I was a day early, which was actually a huge difference in price because I think it's probably around 450 or something. I can't remember. And then the next day it opened at like 540 and then went down to like 380 or something nuts. But during that time, I was, I should not have, that was a complete failure on my part. I should not have thought about the short-term capital gains. I shouldn't have worried about that. I could have played it worse, but I certainly could have played it better. So I wanted those to be long-term capital gains. So what did I do? I sold shorter-term covered calls at like a 700 strike. I sold them against 1,000 of my call options, and I locked in a ton of money. But I still ended up with a larger drawdown than probably if I just owned the stock itself, or similar to, I did protect from the downside some, right? But anyway, and then I sold those options as well before they hit long-term gains anyway. So, the difference in the US, especially if you're in a higher tax bracket, between, let's say, 20% on the high end of long-term capital gains and close to 40% for short-term, it's not enough of a reason for me to walk away from a 10-bagger or a 100-bagger. Of course, time frame is what matters. Who cares if something is a 10-bagger in 100 years? You need it to be a 10-bagger in a reasonable time, during your life, right? Compared to all the other opportunities that you may have. But yeah, the opportunity was too great for me to even worry about the PFIC stuff. I realized that it's possible, but I didn't worry about it because this is all a game of risk versus reward. Taxes are a risk. They're at least in a window, a predictable window of what you can expect the taxes to be, but sometimes that window may be a little bit gray. And this was a case of a gray tax window, but the reward was still there. It did not affect the reward at all. So I know it affected some people, but for me, it didn't change the thesis at all. And I'm just, I'm happy they've addressed it. They don't have to. And I think that ultimately they can probably never say 100% sure. They're a Japanese company. I don't think they can ever say this is what the US IRS will say, because they're not, that's not their place, I guess is the best way to put it. So I believe that some companies do put out guidance about what they think they'll be classified to. And I'm sure that they're always correct on that, because they want to be as honest with their investors as they can be, but they can't give individual tax advice like that. And they can't speak for the IRS. The IRS can speak for themselves. But they do feel very strongly that it's not PFIC, that it won't be PFIC in the future, and that they're not having to do anything out of the ordinary or dodge bullets to dodge the PFIC. They're just doing what they're doing essentially. So it's great to see.
I couldn't agree more. Another thought is put to rest as we've known with Bitcoin for so many years. One by one, they seem to fall. But guys, we've been going for more than 1.5 hours now. We've covered all the major topics that we spoke about beforehand. Any thanks to you guys, Climb, Blake, Brian, for being here, and Ragnar earlier on. Really enjoy these, and I learned so much from you guys, and happy to be able to put it together and share it with right now 3,800 live viewers across X and YouTube. Thank you everyone for watching. But any final words or things you want to comment on, Blake, Brian, Climb?
Yeah.
Go ahead.
Yeah. So I think I would say, I think right now, generally across the Bitcoin treasury company sector, spirits are down a little bit. And the thing I just want to point out is this is what Adam Back estimates to be a $200 trillion arbitrage on the traditional finance system. This is a business model that has legs for potentially 10, 20 years if the hyper Bitcoinization future action plays out. So price is down in the short term. I get it, spirits are down, but people have declared Bitcoin treasury companies dead almost as many times as Bitcoin at this point. And I just don't think that's the case. I think this is, a low for now, but there's so much more to come that I can't help but be bullish right here.
I agree. Absolutely. Guys?
Yeah, I would echo that. I think it does change the dynamic. These Bitcoin treasury companies, looking at, as Brian was saying at the beginning of the call, they kind of have a 5-month MNAV cycle, let's call it premium cycle. And I think that might operate within the Bitcoin cycle. That's something I'm noodling on and thinking through. But I think it could, change things where they can continue to always be growing and having that Bitcoin yield. So time in the market or time with this Bitcoin treasury companies is more important, I think, than timing the market. And then I think one of the big takeaways for me was just kind of reinforced with what Brian was talking about with the stretch product being a huge success here in the United States, but I think it'll be even a bigger success if launched in Japan. And that makes me even more bullish on Metaplanet.
I think that's a great point, Blake. Can't wait to see that. Climb, some final words from you?
Yeah, I'm excited that we're able to get together, do the show today. We'll be, doing more episodes of the Dojo podcast as well. A lot of it has been just, waiting for a good opportunity, waiting for more information to cover and stuff. And when things are a little bit slow, when things are a little bit down, there's just not a whole lot, unless people want their hand held. And as I've posted before, I'm not here and nobody's paying me, and I wouldn't take the money anyway, because that'd be really awkward. I'm not going to get paid or do a podcast just to hold somebody's hand. I have better things to do with my time. Even if it's just watching TV, that's better. So, that's not what I'm here for. I'm here for serious questions, serious discussions. And, if people think my take is too bullish or too bearish or whatever, then they're free to critique it however they like. But I love talking about the company, and a lot of the stuff even that was mentioned here, not everyone likes the sort of free format. But I love it, and there's a place for it. And I'm glad that your show works like this, because, I also like doing slideshows sometimes if there's enough stuff that's like super, that just needs to be gone through like that, right? Through like a process. But things that were said during this podcast made me think differently about some things. And that's the whole point. It's a live brainstorming session, and for us to ask each other questions and just talk through stuff and work it out. So thanks for getting this together.
Thank you so much, Climb. I really appreciate that. All people are different. I like to do it this way. That's how I function best. That's how I roll, and I appreciate that you have taken things away from the roundtable today, and I think we all have. And thanks for that support there, definitely. Yeah, we do the best we can. It's free content. If you don't like it, you can definitely just switch it off. But we do try to add value to people and have useful conversations, and definitely hone each other and our thesis and learn from each other. And I think that happened again today, and I appreciate that. Appreciate you guys. Thanks for being on, and see you on the next one. Thank you so much, guys. Thanks for watching, everyone. Bye.